Hey everyone, and welcome back to another portfolio update video on the channel. Portfolio is currently sitting at $12,185.93. For the day, we're up 74.67 or 0.62%, down about $3 overnight. For the week, we are up a whopping 127.01 or 1.05%. For the month, we are up a huge 390.70 or 3.31%. For the 3 months, we are up $1,169.27 or 10.61%. For the year to date, we are up $994.09 or 8.88%. For the 1 year, we are up $1,399.07 or 12.97%. And for the all-time, we are now up $1,612.85, which equates to 15.25%, which is insane. So we're really getting up there now. The market just keeps on climbing for me. Like I said, look at this year to date. It's pretty much just been a slow grind higher, or I guess you could say it's been a slow grind higher since about April. But still, the overall chart is an upwards trend, which is really nice. And yeah, just 15% return is pretty crazy, and I pretty much owe it all to the S&P 500, which you can see our total gain on SPY now, or on this particular holding, because there's a little bit of a mismatch with buying and selling at one point that reset that P&L, but as of current, we're up over $1,136 on our SPY holdings with over 21 shares, almost 22 shares, which is crazy. And that's obviously where all of our money is, because I've got $0 of buying power. But yeah, so I guess let's just dive straight into this. All right, so here we are on SPY. This is the ETF that I've been investing in for quite some time now. If you're a long-time viewer, you know I've been buying as much SPY as possible it's been months, honestly. It's been a long time, and it's been working out really, really well. As you can see, over $1,000 in profit on this holding in particular, and as you saw before, over $1,600 overall. And yeah, SPY is pushing 560 almost now, which is pretty crazy. It is really, really getting up there, which does scare me a little bit because we have been slowly grinding upwards for quite some time now, which is, I guess for where we are economically, I don't know, it's weird. And you can never really predict the market, but when you see it go up for so long, it does make you kind of a little bit worried. But obviously, the whole strategy I'm doing is basically just buying as much as I can and never selling it. So regardless of where I think the market's going to go or where it does go, not going to take any action on it. So just going to keep dumping money in as I go along, and I guess keep hoping it grinds higher. But overall, we know the ultimate outcome will be that it does indeed grind higher ultimately. So at the end of the day, it doesn't really matter whether we buy or whatever when it goes up or down or at its peak. It doesn't matter. Our average cost is 507.56, which is really cool to see. Once again, almost at 22 shares. And that's a really low average cost considering it's almost at 560 now, especially for that many shares. So that's really cool. Oh yeah, so 10% gain, almost 11, which is really good for the S&P, especially SPY, because it really, I suppose in recent times it's moved quite a bit, but ultimately it doesn't move. It moves quite a bit, but the biggest drawdown you really see in SPY is about 30%. So we've got a really nice cushion we're sitting on now in case we do end up having a significant drawdown. Of course, there's instances that don't follow that guideline. Like 2008 was like a 50% drawdown. But yeah. So we're just sitting on a really nice cushion of gains right now, and we do have a dividend coming in at the end of the month, July 31st, for almost $40, which is also a nice little benefit of investing in SPYs. You get these little dividends along the way 4 times a year. But I thought I would go into the history here and just kind of show you guys the consistency I've been working on with my buying history. So let's just sort this by orders on individual. I guess there's not really anything else that would, okay, well, it won't let me do that, but doesn't matter. So yeah, you can see here, the only time I sold was this $500 limit sell, and that was to start the new options portfolio, as you guys know about. Whoops. So if you saw my most recent video, I'm doing a mini options portfolio challenge, and this was me selling $500 just to move it into that account, because I don't have $500 on deck right now to replenish this portfolio immediately. I will over time, which you can see here. I deposited an additional 170 and then 75 this past week, which has gone straight back in. But yeah, temporarily, this is the only sell in my history for a long time. But yeah, if we just keep looking back, you can see market buy of 50, market buy of 250, 50, 50, 100, 62, 50, 100, 305, 469, 530, 530, 500, 57, 70, 47, and then this is where I ultimately bought back in fully after that temporary sell. You can see there's about a week difference where I switched to SPLG temporarily, and then I switched back. So it kind of sucks that I did that because it did kind of erase some of that history. But at the end of the day, it doesn't really matter. And I believe that was at one of its lowest points anyways, so it doesn't really mess with the P&L too much. But yeah, so this was an instance of that. You can see actually though, my sell and my buy, literally the price did not change basically. I was able to get like 0.16 more shares for the same value, but I don't know. Anyways, that's besides the point. You can see these limit buys going in 245, 320, 348, 200. But the point I'm trying to make is that since early May, in fact, way further back than that. Looks like we might have started in February when we ditched options. I believe we started in February is when I officially stopped trading options on this account. So I guess since February 23rd, you can see I've been incrementally buying here and there with as much money as I possibly can throughout February. Then throughout March, you can see 200, 100, 100, 703, 250. Just been buying as much as possible here and there, which has been really, really good for me. Like once again, these are all buys pretty much. Especially recently, I've been really working hard. Since it's summertime, I got all the time in the world to work. I've been really dumping in as much money as possible. And yeah, you can see how that's turned out for me. It's turned out really good. Of course, I've been very fortunate with the timing that I've done this. Not every time that you start doing this, you're going to be in a crazy bull market. But regardless, I really like the strategy and I'm going to continue to do it. Alright guys, so before we continue on the video, I just wanted to quickly point out the watch time from subscribers. As you can see, 80% of people that are watching this video right now, that are hearing me talk about this right now, are not even subscribed. So if you are one of the 4/5 of people who is hearing my voice as I talk to you through the screen right now, kind of breaking the fourth wall here. If you can hear me speaking to you right now and you're in that 80%, please consider subscribing. I upload 2 videos a week now with an additional educational video every now and then. And yeah, I'm really trying to grow the channel, build a nice little investing community here. So if you are not yet subscribed and you're in that 80%, please consider subscribing. If you're in that 20%, I appreciate it. Thank you. Anyways, let's jump back into the video. Alright guys, so back into the video, I want to cover the economic events that happened this past week, what we saw and what ended up causing the market to continue its climb onwards, and what caused this extreme pump and this extreme dump, as you could I guess call it. And we're just going to be talking about all that right here. So let's get straight into it. So we had Jerome Powell talking earlier this week. I believe he talked on Tuesday and Wednesday. I wish Robinhood showed dates. But I believe, so it's the 13th, so this was Friday, Thursday, this is Wednesday. Yeah, so it must have been here where Powell was speaking, and you can see that caused the market to have a sharp rise because Powell did note that, let's see, basically fear of not reducing rates soon enough or not reducing them enough could end up causing economic damage. Unintended economic damage. So that kind of hints towards potential for rate cuts in the near future. So the market did like to hear that. And yeah, so that ended up causing this big spike early on, the possibility of rate cuts. And then we ended up having this big drop, I believe, because of unemployment. I believe our unemployment results came in stronger than usual. And I think, oh, here it is. I was going to say, I think I had the thing pulled up. But yeah, non-farm payrolls increased for 206,000. Which is better than expected. So that does show, I suppose, the growth of unemployment. Actually, that was on Friday, apparently. So that might have caused this spike here. I'm trying to. What kind of sucks is CNBC doesn't really have a good way to look back at previous articles. But I do recall. I guess I'll just have to start writing down stuff that happens so I can cover it in the video. But I do remember something caused this, and then something caused this, and whatever. But yeah, no. So just in terms of general news, unemployment did come in with more non-farm payrolls. Yeah, so more people were employed than expected, but still almost in line and also below the downwardly revised gain. Unemployment did end up rising, which obviously is not a good thing, but for the market it's a great thing because it shows that the rate cuts are working, or sorry, the rate the rate increases are working because there's a trade-off between unemployment and inflation. If you want to reduce inflation, you have to in turn increase unemployment. So the fact that we're seeing inflation falling towards that 2% target with unemployment rising is a sign that the increased rates are working, which would then hint the Fed to in turn cut rates, putting us into a more expansionary economy, which would ultimately cause hopefully a lot more growth in the stock market, or at least in the economy in general, which is what the market ultimately wants to see, and maybe even has priced in, to be honest. I mean, you can see this crazy move up. They may have already kind of priced that in, but who knows? But yeah, so that's what happened this past week. We had Powell essentially saying, or kind of hinting at potential for rate cuts coming soon, and then the jobs report coming in line with what the market wants to see. So that is what is the result of this little gain this week. Of course, things were a little bit more excited at one point. I'm not sure exactly why that was, but we did have a fall off, but ultimately a nice gain for the week. But yeah, so let's see what's actually coming in the following week. So if we look at the upcoming week, some big events we got going on is Powell is speaking on Monday the 15th at 12 p.m. So that's going to be huge. We could see hints at rate cuts or whatever it might be that we need to see for the market to continue rising. So we'll see what he says on Monday, but that'll be pretty influential. Let's see besides that. I'm not seeing anything big here. Jobless claims could be important. And yeah, so pretty much it looks like the only big event we have going on this week is Powell speaking on Monday. So that'll be pretty influential in the market, likely. So look out for that. Aside from that, though, the big events of this coming week is particularly earnings. I was looking into the earnings calendar. You can see we have Goldman reporting on Monday. Head over to Tuesday. We have United Health Group, Bank of America, Morgan Stanley, Charles Schwab. So we have a lot of big market cap companies reporting earnings this week. It gets even bigger if we head on down. Johnson & Johnson, I believe Netflix is reporting this week. Yeah, Netflix, Taiwan Semiconductors, that's always a big one. Let's see about Friday. American Express, yeah. So essentially this week is going to be pretty packed. We got a lot of big earnings, especially from the banks, which is going to be what people are looking at with Bank of America, Charles Schwab, stuff like that. So this week is going to be pretty hectic, I'd say, in terms of the events, because we got the big speech, and then we also got some big companies reporting this week, and then I think the following week is even more crazy, but we won't really go into that now. Yeah, Verizon, yeah, we'll see. We can cover that next week though, but yeah, so that's what we're looking at this coming week, and I guess we'll just see where that takes the portfolio. I'm not really sure. Once again, we've been on a crazy run, so we'll see if we can continue it, but yeah. Other than that, we pretty much covered this past week and then the coming week and everything in between. So I hope you guys enjoy this new style of video. Let me know down in the comments. I'm trying to work harder on making these videos better quality for you guys and really put some more effort into YouTube, you know. I'm trying to make these videos longer, but also give you guys some more actually useful content covering economic events in the past week and the future, and all the stuff in between. So let me know if you guys like that new style down below. But other than that, thank you for watching this video, and I will see you in the next one. Make sure to tune in next week to see how these events end up messing with the portfolio, and I will see you next time. Goodbye.